morning, everyone. We're taking a couple minutes here to let everyone in. Thank you for taking your Thursday morning to join us. This is our first Coffee with Closers for 2022. And we actually have our very own Charles Durfee with us today to talk about business, how to set up your business correctly. For success, right? How to get it going for success. So it is something that I wish I would have learned a long time ago. And I think that, starting off the year, making sure that your company, your agency is set up correctly is going to be important for a lot of agents on this phone call. Charles, thank you for joining us today. And whenever you're ready, we're ready for your knowledge.
All right, so I appreciate it. Can you see my screen up here? So
yes,
hopefully
we can.
Everybody can.
Yep.
So, before I kick this off, Happy New Year. Great to see some of the people on the line I know very well. Shout out real quick to Sam Craig. Haven't seen you for a while, so always good to know you're out there doing well. So, but before I get into this, I just wanted to kind of set the stage. The presentation I'm going to go over today is really designed to cover some ideas I've got if you're an agent that's just entering the business and looking how to really establish yourself in your business. But I'm also going to work into more if you're an established agent, maybe some ideas that can help you as you kick off your 2022. Maybe consider restructuring your business or looking at some opportunities that might be more beneficial from you, especially tax-wise. And to keep the IRS maybe a little bit out of your hair if you're starting to make too much money. So I'm going to be covering both spectrums. So I just wanted to let you know there's going to be parts of this depending on how many years you've been in the business that might or might not apply to you. What I do know is the great Vince Lombardi, he started off every season with his professional players, day one, hour one, when he'd get them together each season. The first thing that he said as he's tried to motivate his new team each year was he pulled up football up and said, okay, let's start here. This is a football. And these are professional players, and it sounds stupid, but his belief in building successful organizations was you don't jump to conclusions. You don't assume they know what a football is, even though they're in the NFL, right? So let's get the definitions down. Let's talk about some of the basics and let's build from there. So if he does that every year, I think we'd be wise to potentially look at our business every year and go back to the basics. And if you haven't made some changes, the purpose of these calls for the next couple of weeks that Saul mentioned was to help you really consider how you're running and operating your business. So it's not as many sales ideas as it is about structuring your business properly today. Our theme at FFP is in 2022, it's all about you. And you're going to hear Ira, Ed, myself, and our team, Christy and Saul, talk a lot about ways that we can support you in growing your business in 2022. In fact, I was with dinner last night with Ira, and I asked Ira what would be, some basic things we'd like to accomplish. And he goes, man, if we can just get our agents understanding that we're a relationship organization and help them grow their businesses, we're going to succeed and grow also as an FMO IMO. So I thought that was what I was looking for, big numbers, something like that. But I thought it was he really sincerely means that. And I support him in that, and our entire team does. So our success will be built around you and your success in 2022. So let's start off with your business. I think when I'm talking to a lot of agents, a lot of times when I have them explain to me and tell me a little bit about your practice, they talk to me as like they're an insurance agent. And what I try to get into their minds is you're much more than a sales professional or insurance agent. If you're not thinking of yourself as a corporation or an organization or a business, whatever you want to become, I think you're really shortchanging yourself, because there's so many ways that you can build a successful agency out there. And the beauty of our business is you can do it 1,000 different ways. You can do it through some of the top producers are the highest compensated people in the industry, or If you want to recruit or build a sales team, you can do so. And there's just so many different ways you can structure your business. But you need to look at yourself as a business in 2022. And that requires money management skills, and those types of things, and making sure your business is structured right, from, an audit perspective, as well as, as far as tax consequences too. So if you're just starting your business, or you're needing to really maybe get more control around your business, here's some ideas that I have for you about doing that. Number one, banking. An idea I share a lot with a lot of new agents coming in, and when you're starting out, or if you haven't done this and you've been in the business 20 years, it's time you go down and get a separate business checking account. And my recommendation is just a recommendation. And let me disclose, I'm not a CPA, I'm not an accountant. These are just my recommendations, but my recommendations is to have all your commissions go into your separate business account. And with that, all of your expenses come out of that account. And if you're going to have a credit card that you're going to use for your expenses, I even highly recommend getting a separate credit card that you use for all of your expenses. That makes your accounting much easier, because I can tell you, in audit situations, having business accounts, paying personal details, it just leaves you open for a lot of risk and potentially losing out in an audit on a lot of accounting expenses that you can normally take. So it simplifies things. And it sends a message that I am a business and I'm running like this, like a business. Then I recommend linking that to some type of separate savings account. And the reason is, and I'm not going to tell you your number, but when I was recruiting young agents directly to my organization, I would tell them, get in the habit of putting 20% of your commissions into that savings account. And so every time you're paid, just before you see it and need it, move it to the savings. And that savings account is there for you for chargebacks. And that just happens in our business. We lose a case. But more importantly, I think it's having money set aside as you get used to the way your business is structured, how much taxes you're going to be paying. And if you need to invest in your business through leads, if you're very new, well, you need to invest in some kind of lead program or a program that's going to help you really jumpstart your practice to build your presence in the markets that you're doing business in. So with that, then out of that, pay yourself once a week as a recommendation. Get in the habit of living on a budget and only taking what you need to live on. And this is more for starting, like I said, an agent starting out. And the reason you do that, if you can set that budget and then put 20% in that savings, it creates a financial goal. And the numbers might be different for you, but I like kind of having goals that I can see my success in the form of dollar bills. So once your savings is got to $5,000, then give yourself a raise. Start working yourself up into higher compensation and pay, which you work so hard to do. Another thing that's essential to succeed is you need to also understand and have calculated out your monthly estimated expenses. And then I know this is basic accounting then to you, but once calculated, then that's going to help you calculate the minimum you need to pay. And also it's going to give you kind of an idea of how to give yourself a pay raise once you've accumulated that $5,000 in your savings account. And this is a numbers game. We all understand that. And so once you've done that, then we all know it's essential that we know our average sales that we need to achieve our weekly goals, our monthly goals. And it is so important as you're clicking into 2022. on your calendars and your appointments, that you're really ensuring that your appointments and your average case sizes are helping you pay yourself that minimum salary or that salary you need to drive to on a weekly basis. Because everything you're doing in excess right now, the way I like to approach my business is it's just adding to my balance of my checking account. I'll be honest, I like to go in and watch my balance exceed my budget and my expenses and grow. It gives you not only financial comfort for your family and the ability to do things you like, but it's kind of a game I play. It really helps me see regularly my success. And then as a reminder for you new agents on the call, your first year in the business is the hardest, but trust me, if you can start out and develop the right practices and skills, and you can take these ideas that I'm sharing with you right now and implement them, then it gets easier. It's not gonna, that doesn't mean that you got to work less or, not put in as much effort. We all know that's not the case. But if you're on an advanced system as an example, and you're on a 9-month exam advanced, then just remind yourself, if you're used to living on that budget the first 9 months, then months 10, 11, and 12 are account building months, because those extra commissions are just adding to your account, which is adding to your 5,000 or what you've accumulated, which is eventually adding into some nice or significant pay raises for yourself. And that will help you also invest more into your next year's budget as you do your budgeting. So it's not just about this year. When I do my planning, I say, okay, here's where I want to start. Here's my income, my expenses, but I would like to end the year with the surplus of Y, which will let me go to a new budget and a new salary in 2023 of Z. And that's growth. That's something that motivates me in building wealth. We work so hard for what we do, but I think we underestimate the management of our money and our expenses and our assets. And this is January 6th now. It's, if you haven't implemented something like this, sit down and do it. And then we get to the tax deductions. The beauty of our business is there's still a lot of legal tax deductions that we can take. If you do need leads, you need to remind yourself a $350 a week investment in a lead program isn't $350 a week. You get to deduct the cost of those leads, depending on your marginal tax brackets. And especially if you're just working as a sole proprietor, lead costs are saving you your self-employment costs, all those types of things. So this is going to lead me into a little bit of the tax situation, but $350 a week in lead generation or whatever it might be, $1,000 a month, whatever you're spending, might only be $650, because these things are deductible to you as a business owner. And I don't think a lot of insurance agents think that way. They hear $1,000 and they think $1,000. Well, you're going to get some tax advantages through them at the end of the year. Mileage.
Charles?
A lot of people like to use mileage. My recommendation around that is there are so many good apps you can download on your phone that track you, calculate, and you've got in my day when I started in the business, it was take a notepad or in the glove box, and every day you get in the car, write down the mileage or put it in your appointment scheduler. But mileage is deductible, and it can help you give yourself a pay increase. And once again, I'm not a CPA. I'll get to that a little bit too more, but it's an idea. All your supplies you're buying. We do a lot of mailing. We do a lot of things. Printer cartridges and ink is not cheap today. Your cell phones, those types of things. If you're renting, leasing offices, and travel can be deductible. So the beauty of our business is that we can do a lot of legal deductions. The bad part of our business is if you write off everything and pay very limited taxes and you're not structured right, lenders don't like us. You come in with a lot of 1099 income and that's highly taxable, and you take all your deductions and your tax return shows that you make 10,000 a year, it's a double-edged sword. And that's one thing I think a lot of people don't calculate or think about when they're getting in the business. So this is the best thing I've ever done. And that is I got myself I work very closely with my own personal CPA that we talk on a regular basis. And I don't use H&R Block. I'm not talking H&R Block TurboTax. I know some of you probably do your taxes, but sit down. Most great CPAs will give you a free consultation. Sit down and talk to them about your business. You need to know what your expected revenue is this year from your business plan. You need to know what your estimated expenses are going to be for this year, and sit down and share that information with a licensed certified public accountant, because they're going to tell you not only some tax ideas on currently how you're structured. As an example, if you're just a 1099 sole proprietor, they'll look at that, but a great CPA will say, I see Luis, my friend, and a kudos to Luis while I'm in the middle of this, because he brought me a lot of these ideas and made me really think about it as we've done some planning together. And I want to shout out, but that CPA will help you structure your business. As I've seen Luis grow, and I'll use him as an example, we've had conversations about moving from sole proprietorship, or he's an LLC right now, and now we're talking about, should he be an S Corp or a C Corp? Because as you get to certain income levels, we can legally make a certain amount of expenses that you're incurring as sole proprietors go away. And I'm not the one that's best to determine that, but your CPA will tell you or share with you different ways that you can structure your business tax-wise. Listen,
Charles?
I tried to do it on my own. I'm going to give you an example. I tried to do it on my own for a couple of years. I went in and I finally took my own advice here, and I sat down with a good accountant, and he redid my previous 2-year taxes, got me money back. And honestly, I was paying over $30,000 in taxes I didn't need to. That's a big difference, right? And
Charles, we have Luis is raising his hand. He has a question.
yes, Luis.
Hey, I think somebody was trying to ask you something.
So actually, it was
it?
me. I was not really trying to ask. I was actually trying to get your peace of mind on this one, Charles. What would you say to an agent? I'm looking at all the agents here, and I know some of them are set up as a sole proprietorship. What would you tell them to say the benefits of actually doing this and setting this up now and not waiting to do it in the future?
Well, I'm glad you got this on the perfect slide. So Luis, Saul, you guys are working together, and I appreciate it, because man, you just teed the ball up for me right here. So once again, I got to remind you, I'm not a legal CPA or anything, but I can give you I'll show you how I saved over 30,000 in 1 year, right? I needed to be an S Corp, and to become an S Corp, why an S Corp? Because an S Corp is a pass-through corporation. It's not just for the legal separation on my business, my finances, but it also allowed me to file my company's name, get my employer identification number. By structuring myself as an S Corp, I can pay myself a very small salary, what I just talked about in the first I was doing anyway. And then I can start taking a significant amount of my money in what they call shareholder bonuses or pass-through bonus. And a shareholder bonus is not subject to FICA. And if you're a sole proprietor and you're not structured this way, when you file your tax returns at the end of the year in your TurboTax or whatever using, if you made $80,000 and you had 30,000 in deductions, then that extra 50,000, you're paying 12.4% Social Security, where, because you're not an employee, right? You're not an employee of a company. If you work for a W-2, your employer pays half of your FICA and your Social Security. So they're paying 6.2 and then half your Medicare. Well, when we're self-employed or sole proprietors, we're automatically taxed at 15.3% in self-employment. The whole amount we pay the employer, we are ourselves, we are our employers. By being an S Corp, shareholder distributions aren't subject to FICA. They're not subject to the self-employment. So the IRS has a ratio that says, as an example, if you're making, and your CPA will tell you, if you're making 100,000 and there's a ratio of how much shareholder distribution you can get to income. So your CPA might say, if you got to pay yourself at least at 100,000, 35,000. But that next $65,000, I just gave myself a 15.3% pay raise. Or actually a 12.4, because I still got to pay the Medicare. So I don't know if that answered you that way, but right away, I was, gave myself that much of a pay raise. Okay. The second thing is that they'll say is, as an S Corp, by paying yourself a salary, you get a K1, which is to a lender like a W-2. So your corporation is paying you a K1, and that K1 is filed every year. It's your net amount. In that example I gave, if you made 80 and you had 30 in expenses, you still got a 50,000 K1 that makes you look legit. You guys are audit risks if you're just 1099s. If you're making, starting to get up to about 6-figure income, 100,000, the IRS looks for tax deductions on 1099 income, especially through TurboTax. Okay, they know you're doing your own accounting, and you're a high audit risk. If you establish yourself as an S Corp, and I don't want to give the numbers, but 100,000 is nothing to an S Corp. You're not going to stand out, right? That's another thing. You become way more audit proof. Well, the CPA itself and their stamp on your returns is making you way more audit proof. So not only are they saving you money, but you are now, and you're getting a structured income that is a K1 on an S Corp. It's different on a C. Everything's a little different. But it also puts you in an audit risk if you're making $500,000 or $1 million of very low. The guys that are, the average returns on those are 8-10 million maybe, right? So you're not where the average 1099 employee out there, my accountant told me, is making 30. So if you're 100, even the IRS wants to know, why are you still structured that way? They're like, and then people, when they do their own tax returns, start looking for everything that might be legit or not, and they become potentially audited. So I hope that answered your question. Once again, I'm not trying to play the CPA role. You're all different, but I think January is the time you say, it's time I build a relationship with the CPA, because we want to help you grow at FFP, but we want to help you grow in a way that your business is also structured the right way with us. And we want you as agents, it's all about you in 2022, to know that's important to us. It's important to us at FFP that we're trying to help you beyond just products, but to help you establish your practice in the right way. And that's what I want you to grab from today's presentation. And then last but not least, in any successful business, I learned this from Jack Kinder years ago. It's the old saying, keep the score and the score will improve. If you are not on an annual basis doing a budget, writing down what your financial goals, watching your account grow, then you're just surviving. And it doesn't mean you're making a good income and not making a good income, but you're not reaping the potential you could by keeping track of your production and setting goals to get better income wise, not work harder, but these coffee with closers are all about working the same amount of time, but getting new sales ideas that double your production. So I beg you at the beginning of the year to start this year. It's only the 6th. Write down your production weekly. Make sure that production's tying into your revenue goals. Attend as many of these coffee with closers with us as possible. If you've got a great idea that we can all benefit, reach out to us and let us know. And we'd love to host coffee with closers are all about you. We have the whole idea of these coffee with closers is to have you share with us an idea that you think you want to share that we could all benefit from. Invest in yourself and learning. Kudos to Christy. I know you're Christy. You work at FFP, but you're in your courses for CHFC. She invests in her knowledge. I'm in a CHFC course right now through American University. Attend our in-person meetings. We were just in a meeting, Saul, Ira, and myself in Irvine, California yesterday with a great group of agents that came away from a lot of great sales ideas. And we're going to be doing a lot of more of those regional meetings coming soon to a town or a city near you, hopefully, and you'll be getting invites. And then last but not least, and the most important to me, is my family. What motivates me beyond my checking account balance is my 3 beautiful children that I love and my beautiful wife. And I go to work every day for them. And everything I do is about that legacy, that Durfee legacy. If I'm working towards my family goals. So I see so many agents that have financial goals, and I'll ask them, well, man, those are big financial goals. So you must have some great family goals this year. Where are you going? What are you doing? Share with me how the two tie together. Because if your personal goals aren't aligned with your financial goals, then this business isn't near as fun. So, every year I ask my agents, what's your number 1 personal goal this year and what's your number 1 financial goal? And if I got a daughter that's getting married this year and I want to have she wants a 30,000. Well, then these financial goals are going to align. Let's find a way to finance that wedding without taking out of your savings. So let's make $30,000 more to cover it this year. So that's what it's really all about. And that's why we're all in this business, is because if we need to make an extra $5,000, $10,000, $20,000, we can go do it and not have to take it out of our regular salary. We can add it to more. And that's why I know all of you are still here. It's because we've got time freedom and money freedom. But just remember this, money freedom, at the time freedom never comes first. You've got to get your salaries paid and your expenses paid, build up your $5,000 plus, start building surplus, and then give yourself 2 or 3 raises, and then think about the time freedom, especially during COVID. Because if right now you're in your pajamas and your business is more time freedom than money freedom right now, it's time to reset. And with that, I kind of just want to thank all of you for being in our our call. I hope you guys close more business in 2022 and have a record year. And I want to sincerely thank everyone that attended this call today for investing in yourself. I hope we add value. Our number 1 intent in 2022 is to help you grow with us and build a sustained relationship that you can count on with us. And next week, we'll have the second part of the series, where I think Ed is going to interview, I think, Saul and I on some additional ideas on really teeing the ball up for a successful 2022. And then we'll get back into some more sales ideas and concepts and ways we can help your business. And what you can really honestly do at the end of this call, if you got any ideas or suggestions about areas that you'd like us to focus in on about helping you build your business in 2022, will you drop us an email or reach out to Saul, myself, Ed, or Ira and say, listen, I really would like you guys I'm trying to focus in this area. Can you do some things around product or concepts in this area, and we'll tie it and hopefully tie it in. And with that, I'll turn it back over to you, Saul.
Yes, Charles, thank you so much. One thing that Charles did not mention in this, when you set up your corporation, whether it's an LLC, an S or a C corporation, it is going to make it a lot easier for you to actually get an exit strategy, right? If you want to sell your practice down the line, if you have a sole proprietorship, it's very difficult to sell it that way. Your book of business. If you have an LLC or something like that, it's it's a lot easier, and it's a benefit for you in the long run. So you want to make sure that you do set that up. As Charles mentioned, next week we will have our second part of this series, which will be on branding. I know that we talked about setting up the business structure correctly this week. Next week it will be about branding, and and Ed will be interviewing Charles and myself on what we learned and what we should have done differently had we had the experience that we have now. So it'll be a great I think it'll be very good for you guys to join in on that. We're going to try to make it as interactive as possible. So I want to thank everyone that joined us today, and we will see you next week, same time, 9 a.m. Pacific Standard. All right, everyone, take care. We'll talk to you next week. Bye-bye.
All right. Thank you.
Bye.